Hello everyone, it's Steve with Aptera Owners Club. I'm sure all of you guys have watched the May update, but I wanted to kind of talk about in this video the very last part of that, the exciting news. So let's watch it together and then we'll talk about it.
And I have some huge news that will allow us to start customer deliveries in 2025. We've enlisted U.S. capital to fund our production plan. The money they raise would unlock a majority of our $21 million CEC grant. It will also unlock equipment financing opportunities to complete our factory build-out and start volume production. With U.S. capital enlisted to fund our production plan, we must put an end to Aptera's crowdfunding campaign. So on June 30th, our Regulation A offering will be closing. This may be the last time our community will be able to invest in Aptera before we bring into focus our production plan and IPO strategy. We will be doing one final investment webinar before the crowdfunding campaign closes. This webinar will be on June 6th, going over production timelines and our forecasted capital raise. Invitations will be sent out to all investors on June 1st. I want to personally thank you for being a part of our journey. You've been with us since the first Alpha Noir vehicle launched, and we're finally here, ready to prove that when you believe in a better future for all, the impossible will become possible. It makes me incredibly proud of how far we've come, and even more proud of the team who has taken us there. This is just the beginning. Till next month.
Okay, so they have enlisted U.S. Capital Global to help them get the funding for production. Now, let's be very clear. It doesn't mean that U.S. Capital is giving them the funding. It means that they're going to help them raise the funding. What is U.S. Capital Global? U.S. Capital Global is an investment bank, and basically they help small to lower mid market businesses. So here you go. Since 1998, U.S. Capital Team has been committed to providing small and lower middle market businesses and investors with sophisticated debt, equity, and investment opportunities, usually available only to larger middle market companies and institutional investors. All right. So to efficiently pursue this mission, we manage a variety of direct investment funds, act as licensed placement agents, and closely collaborate with our referral sources and peers in professional banking and investment advisory. They are also kind of well aligned with Aptera because they are looking for companies that have a positive social impact. And so Aptera would fit into that category. And so Aptera is, probably considered a small business. Maybe a lower middle market business, but yeah, probably a small business. Aptera currently has no revenue, and they're not in multiple locations. They don't have a cash stream yet, so they're still. I mean, they're beyond the early startup phase, but they're still considered a startup, and I would think a small business, small market business. And then they're also they're using what they call transaction friction, and we'll talk about that. So here's what they do. They offer debt financing and they offer equity financing. And so let's talk about equity financing first, because I reached out to Aptera and asked them, what does this mean? Are you getting equity financing? Are you getting debt financing? What's happening? And they said that that's going to be kind of in this investor webinar they're going to have June 6th. So until then, they're not talking about it. But I'm going to guess that it's some combination of both, and probably mostly debt financing. So let's talk about this debt financing. There's two kinds of loans. There's cash flow loans, and obviously Aptera is not going to be getting a cash flow loan. They don't have any cash flow, and so you cannot get a cash flow loan. So asset-based loans, companies with below average or below average cash flows or credit worthiness. So Aptera has no credit history, and they have essentially no cash flow. So they need to do an asset-based loans, and so they have to have collateral. Their collateral is, you can have collateral based on inventory, accounts receivable, or intellectual property, or other assets like equipment. Aptera doesn't have that many assets in terms of equipment. They have some of that solar manufacturing equipment, and other small pieces of machinery, but they don't have that much machinery right now. And then, so their major, and they don't really have accounts receivable. They have a bunch of pre-orders, but those are not binding and they're not accounts receivable, and they haven't shipped a product to have an accounts receivable. So I think their only real asset is their intellectual property. And so there is a debt to asset value that they're going to assign, and then it determines how much they believe that the asset is worth, and they'll give like 50% or 75%. So like, for example, if they evaluate Aptera's investment intellectual property portfolio at like $100 million and they give 50% loan to value, then they're going to be able to find a loan for about $50 million for that. They also do this thing called unitrans structure, and this structure is basically what it is instead of having multiple loans from different people, they kind of merge them together and turn multiple loans into one loan. And because like they may not have companies that are willing, one loan product that's willing to give them all the amount of funding they need. So they may need to get multiple loans, and then this US Capital Global will put it together into this structure where it kind of becomes one loan, and it just makes it easier, and it makes the debt financing a little easier to understand and a little bit cheaper for the company, which is, these are all good things for Aptera. The other thing that they can do is equity solutions, and I think that they're going to try to do at least partially an equity solution. The reason I say that is because they're closing down their crowdfunding campaign. And Chris Anthony says, with the advent of this collaboration with US Capital, they must close down their crowdfunding campaign. So that's not a typical thing. Is if you were just doing debt financing, I would expect that the banks would want you to continue crowdfunding because it mitigates the risk of a default on their loans somewhat, because they have an alternative capital stream. So I think that they must be doing an equity solution, and they want to have control over that. And so it must be like a stipulation of the equity financing portion of it that they have to close down the crowdfunding. I don't see any other real reason that they would do that. I guess there's like potentially some other reasons. One is by closing it down, they give people like this FOMO, and then you can kind of have a last hurrah. And the people that were on the fence, they see, oh, like this is like my last chance to get in on it on June 30th, so I better get in before that. That may be one reason. Or the other reason is they may think that, crowdfunding has just kind of run its course and they're not going to be able to get that much more funding out of crowdfunding. So closing it down looks better than having a crowdfunding campaign that's just kind of puttering along. So those are two other reasons, but I don't think that those are the reasons, because it's very cheap for them to just keep it going, and I think they've been very successful with it. So my guess is that U.S. Capital Group is trying to figure out some equity solution for them, and as a stipulation of them taking over, they want Aptera to close down their own crowdfunding campaign. So what U.S. Capital Group has is they have a portfolio and a network of private investors that are very high net worth individuals, and they can bring them this offer and say, hey, like here's this great company, and we're doing a like an invitation only investment, and you can get in on it. And that way, if they control it, there's no other option for them to invest in it because the crowdfunding is shut down. They can raise this equity. Now, based on the previous SEC filing, there is I think not a bad chance that these high net worth individuals may get a better price than we got in the crowdfunding. I'm not sure about that, but that's a possibility. So there's like positives and negatives to both sides of financing. So if you do debt financing, it's kind of good for current investors in some way because there's no dilution of their stock. Um, but the downside is if you have a lot of debt and then when the company finally goes IPO and hits the market does not investors generally don't like companies with a lot of debt to cash flow ratio because that makes it so that they don't have much liquidity and they can't expand their business. They're not as nimble. So, and there's a cost to servicing this debt. So they have to pay interest and things like this. So that's the downside of debt financing. On equity financing, the downside is it does cause shareholder dilution. So your stock is worth less, but then you don't have to service the debt. So there's pluses and minuses to both ways. And I suspect that they are doing a kind of a hybrid of this, but we're not sure. They're going to get into it at the investor webinar on June 6th, and I think we're going to get more details of what's going on. Also, what I don't think is happening is I don't think that Aptera has the money right now. I don't think US Capital is giving them the money right now, or they've already raised the money right now. So I don't think the 9 months to production starts right now. I think this means that they've come to an agreement. US Capital has evaluated the company and decided that they can run a successful campaign and that they can find loans and find debt financing and find investors and do the equity financing. So US Capital has a history of doing this. They've been around for 20 plus years, quarter century. And you can look at all the companies that they've helped with financing. And these, range from a couple of $1 million, $7 million to like $200 million. So they've done kind of the range, okay, well, here's a $500 million one over here. They've done the whole range of different kinds. And these are all like, sometimes they're advisory services, sometimes they're debt financing, sometimes they're equity financing, sometimes they're both. But US Capital doesn't want to spend money and spend their time on a company that they don't feel like is going to be successful in getting this financing. So they've evaluated Aptera's assets and their business model and decided that this is going to be something that's worthwhile for them. So I think that's a very good thing. And then they're going to do this over the next couple of months probably. And depending on if it's debt financing, it's going to happen pretty fast. The equity part might take a little longer, but what I don't think is happening is that Aptera has the $50 to $60 million like right now. Like that check has not been written. They've just come to an agreement with this investment bank to be their partner in raising this financing. Okay. So I think that's what's going on. We will need to wait until June 6th to get the details of this. Right now, we don't have very many details about what's happening. What we do know is US Capital Group has evaluated it. They like what they saw. They decided to take Aptera on as a client. And I suspect that the way it works is they get like some percentage of the finance because Aptera doesn't have money to give them to do this. So I suspect that it's sort of like lawyers taking on a case and taking a percentage of the winnings. That's what US Capital Group is doing. And so they've evaluated, they feel like it's a good use of their time. So under their evaluation, Aptera is a good company for doing this. And then they're going to work with them over the next couple of months and get something that's a combination, in my guess, and we're going to find out if my guess is correct, my guess is mostly debt solutions and partially equity solutions. And then as soon as they get the debt, then they can start buying all the equipment. That will unlock the California grant because the California grant is a matching grant. You have to spend money to get the money from them. So they don't have the money to spend yet. And so this will help them unlock that. And that's what he means by it unlocked most of the $21 million from the California grant. Okay, so that's what's happening on that. And finally, I think that the crowdfunding closing is a stipulation of the equity financing that US Capital Global is going to do, but I think it does have the nice side effect of having people that are on the fence about investing in Aptera realize like, oh, there's just until June 30th to get in on this. And if I don't get in, then I can't get in. So I think we're going to see a little bump in the crowdfunding. And also, this will be the last chance for the accelerator leaderboard to jockey for position. That will end on June 30th. So I think we're going to see a little bit more jockeying for position there and a little bump in the crowdfunding, which will be good. If they get a big bump, then this whole the work that U.S. Capital has to do becomes much easier. All right, well, tell me what you guys think. Give me your best guesses on what kind of financing solution is happening, and if you think that there's going to be a large bump in crowdfunding from this announcement. All right, thanks for watching, guys. Have a great day.